What you need to know about Forex, a beginner's overview. Ever wondered what Forex is all about? You see it mentioned everywhere, from news headlines to online ads. But what does it actually mean? Well, today we're going to break it down in a simple, easy to understand way. Forex is short for foreign exchange, and it's the largest financial market in the world. Think about it this way. When you travel to another country, you usually have to exchange your money for the local currency, right? That exchange is a tiny part of the massive Forex market. So, how does it work on a larger scale? The Forex market is where currencies are traded. Currencies are always traded in pairs, like the euro against the US dollar or the British pound against the Japanese yen. The value of these currencies is constantly fluctuating based on a huge range of factors like economic stability, interest rates, political events, and even natural disasters. Traders try to predict which way these currency values will move. If you think one currency is going to get stronger against another, you buy it. If you think it's going to get weaker, you sell it. Let's use an example. Imagine the currency pair is the euro and the US dollar, or EUR, USD. If you believe the Eurozone's economy is getting stronger and the euro will rise in value compared to the dollar, you would buy the EUR-USD pair. If the exchange rate moves up as you predicted, you can sell the pair for a profit. Of course, if it moves in the opposite direction, you would incur a loss. It's this potential for both profit and loss that makes Forex trading both exciting and risky. Now, who trades Forex? It's not just big banks and corporations. Thanks to the internet, everyday people like you and me can participate. Individual retail traders make up a growing portion of the market. The Forex market is also unique because it's open 24 hours a day, 5 days a week. It operates across major financial centers around the globe, so when one market closes, another one opens. This means you can trade whenever it fits your schedule, whether it's early in the morning or late at night. But before you jump in, it's super important to understand that Forex trading involves significant risk. It's not a get-rich-quick scheme. Success requires education, a solid strategy, and a lot of discipline. Many beginners start with a demo account, which lets you practice trading with virtual money in a real market environment. This is a fantastic way to learn the ropes without risking any of your own capital. You can test your strategies, get familiar with the trading platform, and build as you predicted. You can sell the pair for a profit. Of course, if it moves in the opposite direction, you would incur a loss. It's this potential for both profit and loss that makes Forex trading both exciting and risky. Now, who trades Forex? It's not just big banks and corporations. Thanks to the internet, everyday people like you and me can participate. Individual retail traders make up a growing portion of the market. The Forex market is also unique because it's open 24 hours a day, 5 days a week. It operates across major financial centers around the globe. So when one market closes, another one opens. This means you can trade whenever it fits your schedule, whether it's early in the morning or late at night. So, to sum it all up, Forex is a global market for exchanging national currencies. People trade currency pairs to speculate on their changing values. It's a massive, 24-hour market accessible to everyone, but it comes with high risks. The key to starting is education. Learn as much as you can, practice with a demo account, and never invest more money than you are willing to lose. It's a fascinating world, but one that demands respect and careful preparation. If you found this beginner's guide helpful, make sure to hit that like button and subscribe for more content to help you navigate the world of finance. Got any questions? Drop them in the comments below. Thanks for watching, and see you in the next video.